Focus on actively traded stocks. One important criteria to consider when evaluating a stock to trade is the average daily volume. This number is found in a list of a stock's fundamentals. Free stock charting websites typically list the basic fundamentals of a stock, and this number is easy to find. The daily number of shares of stock that are traded is referred to as liquidity. A stock with a large number of daily shares traded is said to be very liquid. The more a stock is traded, the more liquid it becomes. Trading stocks that have a very high average daily volume, that are very liquid, is beneficial for several reasons. First, it ensures that you will be able to buy and sell the stock easily, as there are many shares available for trading. Low-priced stocks often have thinly traded shares on a daily basis, and if you own shares of stock that you want to sell, you might have a hard time getting out at a price you want. Secondly, highly liquid stocks will have a lower spread between the bid and ask prices, which is the price a stock can be purchased for and sold for. A narrow spread, the difference between the bid and ask prices, can increase your profit when buying and selling the stock. An example of a narrow spread would be 5 or 10 cents. Also, narrow differences between bid and ask prices are evidence that these prices are efficient and fair. Typically, a highly liquid stock will have a large number of average shares traded daily, well into the millions of shares. For example, as we write this, Apple has a daily average volume over 76 million shares traded every day. Penny stocks often suffer from low liquidity. A penny stock refers to a small company whose shares of stock are not traded very often. As a result, there is risk that a stock's price might make sudden moves up or down. Traders may have trouble selling these stocks when they want to, and they may not get a fair price. Penny stock prices are generally under $5 per share, and can be highly speculative. The difference between the bid and ask prices will typically be very wide for penny stocks, adding to the difficulty in making a profit when buying and then selling these stocks. Liquidity is especially important to options traders who use such strategies as vertical spreads and iron condors. Funny names, but commonly used trading positions. Option traders look for stocks that have a high volume of shares traded daily as well as a high number of option contracts traded daily. Generally speaking, stocks with low liquidity are best avoided. Focus on actively traded stocks and options to reduce your cost and risk, and put the odds in your favor for profitable trades.